Good morning, boys and girls on the East Coast, and good afternoon here from Germany. This is Pascal. I'm hosting your live stream for Producer Price Index today. It is Thursday, Thursday, April 13th. And we will probably see some more volatility like we have already seen on CPI day yesterday. So let's begin with the news or with the market. Whatever we want to see first. Nasdaq, like always, we had this high point yesterday during the live stream with 13,241 points. Then this drop, we were talking about it to retest the pre-market lows, and you see we drew these lines here during the live stream, and you can see that it was holding. So we retested the pre-market lows, just went some points below here. Low was 13,038 points pre-market, and then went to lows of 13,033 points, just 5 points below pre-market lows, and then went to the upside again and retested our VWAP. Purple line here is volume weighted average price, and then you see it was rejected from there, and now we had a lower high point, and then we made a lower low point. And you can see where the low point was. The low point was right at the Fibonacci level, 23.6%. So it was almost ideal, because here you see this was the previous low point. I drew the line here for the previous low point, 12,960 points. We were talking about this level. And then right into this support zone, the price turned to the upside again and again retested VWAP, which was now a little bit lower. And then we made another lower high point and were rejected again. And you see here on this 15-minute candlestick chart that we were always trading below the parabolic dots here. So this was a strong downtrend. It was indicated here by ADX as well. So as soon as we crossed here the VWAP, you see the crossing here of these two lines. So you see it changed to a downtrend. And it always stayed in this downtrend. Just here we had this small crossing again of VWAP, and then we crossed again and stayed in a short trend. So we always had lower highs, lower lows, and yeah, it was a short trend until the closing here, and we closed at 12,958 points. So we are a little bit above the closing level, just 10 points or 20 points above the closing level. But still waiting for the news in about 8 minutes. It's still pre-market. Need 1 more hour until the market opens. So let's see how far the market can move today. What is to expect? So yesterday we had a movement here from the breakout level at 13,050 points to the high points of 13,240. So this was about a 200 points move. Let's say 200 points. But yeah, it's CPI day, so we have normally more movement on CPI day than we have on PPI day. So if we had 200 points yesterday, so probably what to expect today, 100, maybe 150 points if there's a big miss of the expectation. But I don't believe that we will see more than 200 points like we have seen yesterday. So I would rather expect 70 to 100 points movement here. It can be even less if the news are like expected. So let's see the economic news here. And here we have initial jobless claims today, like every Thursday. And we have PPI news, producer price index, and this one is expected to come in at 0.1%. Previous number was negative, so we had a deflation in the previous months. Now we have inflation back, 0.1%, still a low number, but CPI was lower than expected yesterday, so probably PPI can also be lower than expected. So if it's just 0%, then we will probably see the same movement like yesterday. At first a spike up and then see a downtrend again, because yeah, if we don't see inflation and the producers have to lower their prices, and this is one more sign that we will probably see a slowdown in economic growth and a slowdown in the economic activity overall, and therefore maybe one more risk of recession. So here 0.1% expectation, and you see the slowdown. The previous forecasts were 0.4 and 0.3, so the PPI producer price index is also coming down like the CPI. Let's see how the number will be here. I will just go to also see the 1-star events, so maybe we will also have the yearly number, because there we can often see it a more easy way. PPI year over year, don't know why it is a 1-star event, but here we see a 3% growth in producer prices over 1 year, but you see it comes down from 4.6%. So the expectation is 3% over 1 year. So compared March 2023 with March 2022. And yeah, you see this big slowdown here. It is still in inflation, but a lot lower than CPI. So yesterday we had the CPI. Let's see yesterday, or let's see this week. And yesterday we had here CPI was at 5.0% yesterday. So it's still bigger than the PPI inflation. Okay, 5 minutes until the news. So let's see the important levels here. And then I will go to your questions. So the important levels are still the same like yesterday. This one is an important level to the upside. This was a support yesterday, so it now acts as a resistance. And then we have a further resistance here. This was a pre-market high point, 13,018, so right above the 13,000 level. It's still a psychological level which now acts as a resistance. It was a previous support and now acts as a resistance here because we are trading lower. Then as well the lows from pre-market during the Asian session here, 12,925 points. This should act as a support. So this is just 60 points away, but of course we can test it to the downside as well. But I'm expecting the same movement like yesterday, maybe 0% outcome of PPI, then a spike up of 50 to 100 points, and then see the same volatile move here to the downside and retest the pre-market lows and then break below. This would be an ideal scenario for my position because I'm still short in a swing trade on Nasdaq here. Let's see if it plays out or if I'm wrong here. It's Thursday, so I love Thursdays because these days often have big moves here. I'm not expecting it today, but yeah, everything can happen like we all know. So be prepared for everything and know your levels. So to the upside, you can also draw some lines here on the previous high points from yesterday. Probably this one will be more important here to the upside because we had another high point here the day before yesterday and a high point yesterday. Yeah, so 13,125 is also another high point. I don't hope that we go there, but yeah, let's just prepare for it. Everything is possible here. So these are our levels, and if we go to lower levels, then there can be more sell-off because, yeah, I will just zoom in here. There are a lot of lines now, but you see there is some room to the downside because we are testing now the 20 EMA level, and like you have seen, we have closed pretty low yesterday, below the parabolic dot, and therefore it went to the upside, indicating an early downtrend. And you see the crossing of ADX, it's about to cross here now and indicate a change as well to the downside. So be cautious here because this can be the beginning of a downtrend, and therefore you have to be cautious what happens today if it changes back or if we sell off right away. So the next target can also be these 12,750 points, which is the next Fibonacci level, the 38.2% Fibonacci level here. This would be my first main target here to the downside, 12,750 points. Maybe not today, but at the beginning of next week maybe. Let's see how fast we can go below, because if we sell below the previous low points, then probably we will see more sell-off here. Now let's move to a 1 minute time frame and see the news on top, and then I will go on to your questions. And yeah, let's just see CME FedWatch tool first, just to see the pre-market expectations for volatility. We still have 30 seconds left, and there's 66% probability of a 25 basis points move and 34% probability of no change at the next Federal Reserve meeting in 20 days. So back to the news here for PPI today. Where is it? PPI here. No, this is Friday. We want to see PPI here. Okay, your questions. Would you trade CI huge gap? Would you trade SB short? Yeah, we will talk about sugar soon. So now the news are out and there is this up move like expected. So the numbers came in. Core PPI minus 0.1, so it was a deflation instead of the expected inflation, 0.3%. So this is indicating a strong sign here, in my opinion, of beginning recession here. Core PPI year over year just in line, 3.4%. PPI monthly number, this is really, look at this. So this is the first sign. So the yearly number is like expected, but the monthly number is a lot lower. So there's almost no risk of inflation here. It's a big deflation, but that's not a good sign. So the producers of food will probably have to lower their prices. So they went up with the prices during the high inflation, during the phase of high inflation. And now the people are trying to save their money and not spending a lot of money. And therefore they have a lot of stock. So they have to get rid of this stock and therefore they have to lower the prices. And this is what we see here, that the producers are lowering their prices. So there are no stable prices here. We see lower than expected prices, 0.5 percentage point. And this is normally the beginning of a recession when the producers are not able to stay with their prices on the same level and are not able to go higher. So yeah, it's good in terms of inflation and in terms of the risk of higher interest rates. So we will probably see a shift here back to no interest rate change, but it's the beginning of a recession. So okay, we have you see we were rejected here by this level. We still have the line from yesterday. This was a high point from yesterday and we were rejected and we are making the downturn right away. So what was this? A move of from 87 to, what was the high point here? Let's see, the high point was 13,040. So this was about a 50 points move, almost nothing, just some points to the downside and 50 points to the upside. A lot less than yesterday, but it's not over yet. We can still go higher. But yeah, it's already looking a little weaker than yesterday, because yesterday we had several minutes going to the upside before we went to lower levels again. But it's an ideal scenario, so I would say this is looking pretty good for my shorts here. Just staying in my swing trade position and aiming at 12,750 and lower. And now back to your questions. Would you trade crude oil huge gap? Yes, we talked about it yesterday, so if you missed the stream, just rewatch it. Crude oil has a big gap here because of the news from previous week about the cut in oil here for 1 million barrel per day, and therefore we had this huge up gap over the weekend on the opening on Monday previous week. And now we are here at the previous high point, so we overshot and we are now sitting above. So I don't know if these levels can be held, but if the market will tank, then probably crude oil prices should follow. So I don't believe that we will go back to 88 right away. So yes, it's a sign of strength here, of course, but normally this is just a retest. We fished now some stop losses here sitting right above the previous high points, and then when the stock market is going down, then probably we will soon see a closing of this gap here. So yes, I would trade it short, maybe not shorting crude oil futures, but shorting a call, so selling a call on crude oil, then aiming to close here this gap. So what can we do now? We can use Fibonacci retracements, go to the previous high point from yesterday and draw Fibonacci retracement to the previous low point here from March 19th. And now we see a nice rejection level here. So 23.6% is sitting right at the beginning of the gap. And you see here the next Fibonacci level is sitting right before the closing of the gap. So I would aim at this level here, 38.2%, right before the closing of the gap. This is $76 and about 17 cents. So let's say $76 or right above $76. And there I would aim with my shorts here to this level. If I have a short call in place, then I would just aim at 80% of the premium I have earned when I sell the call. But if you would go into a directional position with a crude oil future short, then I would take these as a target here. So like always, no investment advice, it's just my own opinion here. Only for entertainment purposes, you do your own due diligence, but this is about an 8% move. And now you can place your stop loss pretty near. So if we just go $1 higher above 84.50, you can place your stop loss and you are out of this position. So you only risk $1.50, but what you can earn is about a $6 move or even more. So it's pretty nice risk reward ratio, I would say. And therefore, I told you in the previous streams to wait for this level to come to short it and not to trade it to the long side, because the risk reward ratio is now better for shorting, because you see we are still in this uptrend. Yes, it's early to short it, but the ratio risk to reward is a lot better now for shorting than to go long just to take on here $1.50 or $2. And yeah, I like more to trade here against the trend than going long in a trend when I see no more potential to the upside right now, because I'm expecting the stock markets to go down, and we have a high correlation between crude oil prices and the stock market. And therefore, I believe that crude oil prices will go down as well. And the same for Euro US dollar. We talked about it yesterday. And look at this shot here. We had now high points of 110.44. So this was about the previous high point. We had 110 yesterday. So the high point yesterday, oh, this is a weekly candle, sorry. We had a high point yesterday at 110.006. So right, tested the 110 level. And now we had the previous high point. Previous high point was 110.33, and now we had 110.44. So we just tested the previous high points, triggered some stop losses there, and we'll probably see a sell-off. So this is an ideal level to short again, to see a double top at first. Let's see if it comes like this. So it's a pretty strong weekly candle, of course, for the euro, strength of the euro, weakness of the US dollar. But when the stock market will come down, then we will see more strength of the US dollar. So an inflow back from the stock markets, from the risky assets, back into cash, US dollar. And therefore the US dollar should get stronger in the next days and weeks when the stock market is coming down. I don't know. I have no crystal ball, but it's just my personal opinion here. And yeah, that's for Euro US dollar. Now to sugar. Yeah, let's first do natural gas and then come back to sugar. So natural gas is still sideways trading. After we had this doji candle here, we were just rejected to the downside again and closed at 209. So still in the sideways trading phase, you see, and therefore I told you not to go in a long trade too early. Wait for the closing above 225, I told you. And we had the day before yesterday was the high point 224.7. So we are still trading below. It's still a sideways trading phase. Therefore, don't rush into a trade. Wait for the level to break. Unless you want to be in a sideways trading phase here stuck and just watch paint dry. So that's not interesting. I still believe that this is just phase 2 of a reversal. So we went to the downside. We are now forming a bottom, and then we will soon turn to the upside again. But it takes time, and it can still take 1 or 2 more weeks. I don't know when the breakout will happen, but I still believe in it. And I'm still in a long position here and with a short put, but it takes time. But at least I can earn money with being in a short put position and the time going by, because yeah, the time value will go out of the option of the put, and that's time is in my favor here. But if you are in a long future position, you will not earn money being in a position. That's the difference. Okay, now to let's just have one more look at the Nasdaq. So it went down to 9 EMA and found a support there. We are right at the psychological 13,000 level now. So let's see how long it will take to break it, to retest VWAP here. So we already had a retest of VWAP, as you can see here. We retested, went above. So this is a Fibonacci level, and this was VWAP. So it was an ideal retest here. And now we wait for more signs of weakness here to break to the downside and retest pre-market lows, and then see if we can see lower lows on the opening of the stock market in the US in about 50 minutes. Okay, let's talk about the other commodities like sugar. Sugar had a nice down candle here on the day yesterday, but is going higher again today. So we are up 1%. So I would wait. I said yesterday I would wait for a clear sign for a break and see lower levels. So it's not happening right now. Maybe we see the same with like with natural gas, just forming a top here and going sideways. Like we have seen here, it was just a long sideways phase until we saw the breakout to the upside, and then there was a squeeze to the upside. So we can see the same here and building a top and just going sideways, and then when we see the break below 23.75, 23.50, whatever, then we will see more downside potential. But I would wait. I mean, you don't have to rush into a trade because we can still go to higher levels, and I will not rush into this short because I was already early to a short here in the sideways trading phase and then had to go out when we saw the breakout here to the upside. So therefore this time I will wait for a clear break and then enter the short when I see downside potential. The same for orange juice. So we talked about this yesterday. It's still on my watch list. I'm still waiting, and it's going to the downside today. Here is it? Yeah, no, it's not open yet. But yeah, when it opens, we will see. Oh yes, it's already open. It opened at 2 p.m. my time, so 8 a.m. Eastern time. But it's yeah, we just have to wait here. It's not going below the previous low points. It's just in a sideways trading range, as you can see. It's the same pattern with sugar, and therefore we have to wait for a break to see the potential for lower lows and lower highs. So I would wait and not rush into this trade. You still have enough downside potential here to go back to the previous sideways trading phase like we have seen in sugar. So wait for it and don't rush into a trade too early unless you want to be stuck in a sideways trading phase. And yeah, your capital will only work for you when it's going into your direction. And I like the fast and quick trades and not being stuck for weeks in a trade and not earning money and not yeah, being able to turn on my capital and to make some profits. So if I'm in a trade, I don't have the money for other trades, and therefore I don't want to waste my time here sitting on a trade just going sideways. Let's see some other major stocks and then close out this live stream. Tesla is going down, was rejected here from the high point of 199.60. Trading right at $181 right now. Was the low point yesterday, right above $180. So I'm still looking at it, but it will probably get to lower levels together with the market overall. Wheat, I'm still in the same position. It's just sideways trading here. Nothing interesting. ES future was interesting yesterday. We closed right at the 9 EMA line. So right at the support. It's still a little bit more bullish than NASDAQ. As you can see, we are trading above the parabolic dots here. We are trading above the 200 SMA, above the 20 EMA, above the 9 EMA. So it's a lot more bullish than NASDAQ. But as soon as we will close below 4,100 or below the 20 EMA level, there's more downside potential. So maybe we will retest here the 200 SMA line sitting at about 4,020 points, where the parabolic dot is as well. So this should act as a support, but there is downside potential. So this is about the 2.8% downside potential here for ES future for the S&P 500 index. Yeah, then WIX is still at low levels, 18.7. Yes, because all the news are over now with CPI and PPI and initial jobless claims. We haven't talked about initial jobless claims. Let's see, initial jobless claims were a little bit higher than expected, 239. So now we see the first signs of this incoming recession. Yeah, it's a weekly number. Therefore, we don't see a big miss here, but it's higher than expected, and that's good. That's what I want to see. That's also the same like what the Federal Reserve wants to see. They want to see a slowdown in the economy and less inflation risk. So that's perfect, but that's now the tipping point where the market participants now have to decide, is it good for the stock market because of less fear of inflation and less risk of higher interest rates, or is it already bad because of the incoming recession? And yeah, we will see this decision within the next trading days and weeks. But yeah, I have this pretty strong opinion that we will see a big recession and therefore will have to go to lower levels with the stock market. Okay, yeah, what have we left here? Nothing from your side with questions. So let's have one last look for TLTs on a daily time frame. So no big changes here, just going sideways, making a doji yesterday. Let's see the interest rate expectations after these PPI news. So if we had a shift here, we had 66% before and we have 65% now, so almost no change here, but it can still change within the next trading days, and the probabilities for the next Meetings ending the year at 4.5%, so no change here, and still expecting the high point with about 60% probability at 5.25%, so 25 basis points higher than the current interest rate level. Okay, yeah, then I think we have we've gone over all major markets here, in my opinion. If you missed something, then just write it below the video. You can rewatch it, this live stream, then let me know, and then I can take care on it the next time I go live. So let's just see our calendar for the next time I will go live. So unfortunately tomorrow I won't be at my desk because I'm on a travel to Hamburg. It will take 6 hours by train, and therefore I cannot live stream here pre-market retail sales and core retail sales for you. But yeah, if there's some major changes, I will let you know. And we will live stream next week again. Let's see the important news next week. There's building permits on Tuesday, so I will try to live stream these here Tuesday at 4:30 p.m. my time. This is 8:30 a.m. Eastern time. And on Wednesday, no major news in the US. We will have CPI in Europe, but this will not be important for the US traders. So Thursday, Philadelphia Fed Manufacturing Index. Yes, this one will be important as well. 2:30 p.m. so 8:30 a.m. Eastern time. Existing home sales half an hour after the market is open. And yeah, that's it for the week, for the next week. So I will live stream on Tuesday, and I wish you a nice start into your weekend already. And we will see us next week on Tuesday. So if you haven't done so far, please subscribe to my channel and like the stream. If you had some nice insights, I wish you happy trading and some nice profits. We will see us next week on Tuesday. Goodbye.